Well, the earnings parade marches on. You had Chipotle, Snap, and Disney, as well as Ford, all out with their numbers last night. But let's be clear. The real buzz in the market smells a bit like Musk.
Yeah?
Elon. Yeah, Tesla getting all the attention yesterday. Another monster session for that stock. It closed at a record $887 a share. Get this, that move yesterday added about $20 billion in market value. It added, Andrew, a Fiat Chrysler in value yesterday. Tesla's market cap is now equal to or greater than, remember that in high school?
Yep.
Nike, Nvidia, or Bristol Myers. Its market cap, if it keeps going up, could surpass McDonald's and Citigroup next, but it could take a little bit longer, at least according to Canaccord Genuity. In the last hour this morning, they downgraded the stock to a hold with a $750 price target. Also new in Tesla news today, a senior executive said the company will temporarily delay delivery of some made-in-China Model 3s that were scheduled for delivery in early February because of course, the coronavirus outbreak. The executive said the Shanghai plant plans to restart production on February 10th. All right, let's now bring in our friend Gina Sanchez, founder and CEO of Chantico Global and a CNBC contributor out in Phoenix. So I don't know if you're getting up or you've just stayed up. Maybe you're just awake all the time. Gina, thanks for joining us. Okay, the other night on Fast Money, Guy Adami called Tesla a mania, Dan Nathan as well. Do you think this is a real move, or is this a move that is going to burn a lot of individual investors ultimately?
It feels like a mania. If you look at its forward earnings, I mean, it's 110 times forward earnings. So you think about how long it's going to take to actually make that back as an investor. It's not just about delivering 500,000 units next year. It's about delivering millions of units for the next 20 years. So, you know, there are those that are saying, well, this could be the next Amazon. But, you know, the fact of the matter is it's still only 18% of the electric car market. And it's got a lot of, there's still a lot of room to sort of, you know, figure out if the story is going to hit or not. And, you know, you have also other car makers that are figuring it out. To some degree, Tesla is actually doing a lot of the discovery of how you focus on electric cars. And they are managing to get their costs down. They're getting their cash up. So they are making all of the right moves. The question is can a newcomer persist, you know, come and become dominant in a market where you have a lot of existing market players?
You know, it was interesting. Gina, we had on Ron Barron yesterday, and one of the questions we asked him is, you know, you got 1.6 million shares that you've owned since 2014. It's moved 80% since January 1. Do you lighten up even just a little bit? I mean, if you're disciplined about your portfolio, you know, you've got a huge winner, do you take some off the table? And he was like, absolutely not. I found it. He had even admitted that the portfolio manager at his company had said, hey, should we just trim a little bit here since we've had so many gains? And he's just stuck with it, which I found so surprising. If you've been in it that long, why not take a couple dollars off the table?
Yeah, and if you look at actually even the biggest Tesla bulls have taken money off of the table just as a matter of ensuring that they're not caught in a massive unwind. And when you're trading at $110 forward earning, 110 times forward earnings, that's a pretty big bet that you're making. And you're going to have to sit in that for decades, not years, decades, to make that back.
Did you guys realize, and it didn't occur to me yesterday, that now that it's over $150 billion in market cap, he's now crossed the second threshold for his compensation plan. So every $50 billion of market cap that the company goes up, he collects effectively 1% of the company, a new 1% of the company. Now, it has to stay above these thresholds, I think, for 60 to potentially 90 days. But even if it goes down after that, he's still, it automatically vests, meaning after the 90-day period, if you can keep the stock over a certain number for a certain period, so long as he has other metrics he has to reach as well, but I believe they've already hit those.
His wealth is being elongated.
You know what?
That's a Sullivanism.
That is a good. That's early in the morning to come up with that.
Wow,
I give you lots of credit.
I didn't sleep. I did fast money. I just stayed here in the Nasdaq
all night long.
He's got a nice little kicker, doesn't he?
So I hear a question in there. Is the question like, is that right? Because if the price goes down later, should he really have continued to hold that share? I mean, every single time his percentage goes up, in theory, he's more incentivized to keep the price higher, right? And continuing to do what he's been doing, which is really sticking to his knitting.
He's a huge owner of the company already.
Gina,
he's incentivized.
You're saying the marginal difference isn't enough to...
Well, I don't know.
Who's the buyer? Who's buying Tesla stock right now? If you look at things like Robinhood, right? Robinhood, the app, right? You can look at that and you can look, there's ways to track what people are buying. And I tweeted this out the other day. There's a lot of retail people buying Tesla on the buying 2 shares.
I keep hearing
who's the buyer of Tesla?
Hedge funds and institutions. There is a whole wave of professional investors who are playing. But they're playing
what are they doing? Game. The FOMO
trade? But it may not be a FOMO value. I'm in this forever play.
They're riding the wave.
Maybe let's ride the wave while the wave is here.
We had a bear on yesterday who
there was
a Tesla bear, and he said, what are you talking about retail investors getting in now? This has always been a retail stock. The new buyers are the hedge funds. Now I'm getting calls from all these guys in hedge funds, mostly guys, saying, now I'm going to get into this, right? Because they have FOMO.
Yeah, fear of missing out. I mean, listen, you also, this is not a short covering rally. That's a lazy way to describe it. It was a short covering rally. It's not anymore. By the way, Gina, if you want to short Tesla, anymore. It's easy and cheap. Go ahead and then bet San Francisco and the under on the Super Bowl today, if you know what I mean. There's plenty of hedge funds that are willing to let you short Tesla. I've talked to a couple of them. Yeah, because nobody dares short this stock.
Right, but Brian, if you look at actually the top holders right under Musk, it's actually Bailey Gifford and Capital Group. Those are not, those are real funds. So there is ownership out there. And fascinatingly, their positions are actually going up, not down. Musk's position is actually going down on a relative basis. So, it's just an interesting story. And people who believe in Tesla believe in it in a fanatical kind of cultish way.
Yep. Ron Barron yesterday said he wished he could add to his position, but they were hitting ownership limits based on the structures of the funds. But he would like to do more.
Right. But ultimately, he's laying the groundwork for electric car ownership. Before this, electric cars were this tiny segment of the market that were just kind of uncool. But now it's cool, and he's making it profitable. Now, that remains to be seen.